And it's been a very, very healthy month all the way around. And I think this is exactly what we need, because not only do you have sellers winning, you have buyers feeling like they're winning, and they're getting what they kind of want versus having to settle, which a lot of them did in the past.
Let's talk about that, because
Hey y'all, Katie here with Team Evo AZ. Thank you so much for following us and listening to our podcast. Here is season 3, and we are super excited for this season. As you know, we are based in the Phoenix, Arizona area, servicing buyers and sellers throughout the valley. But what you might not have known is we are expanding nationwide. So if you know of anyone that might be looking to get into the real estate business or needs to buy or sell a property, but it is not in Arizona, we can still help. Please feel free to message us and enjoy the show.
Hey everybody, it's Katie and
Matt.
And we are here again with R.E.A.L, which stands for Real Estate in Life, the show where this married couple from Phoenix, Arizona talks a little bit about real estate and a lot about life. Or is it the other way around?
I think it can go both ways. That's the beauty of it. So.
Awesome. And we are here with our monthly update, monthly real estate update. It's super hyper local here in Phoenix. And we are here with Ryan Gilliam with Waterstone Mortgage. Hello, Ryan.
Hey guys. Thanks again for having me. How are you doing today?
Ryan.
Of course. We're doing awesome. How about you?
Doing great today.
You hanging in there? Are you guys dry over there in Gilbert? Because Ahwatukee's been a little wet this week.
It has for us too. I've actually turned my sprinklers off for the past week and a half. It's been great. Saving water. Gotta love it.
Yeah,
perfect.
Absolutely. Yeah. With all the latest news and our water restrictions being implied up at the Colorado River, I think it's a good time to start practicing that.
Oh, really? What's going on?
Well, they're just there's been some changes. The feds have stepped in and are noticing that our water supply up in Lake Mead and such is really low. So they're starting to restrict some water. It's not going to affect residential here in the valley, but it will affect farmers. But they kind of plan for that because a lot of the farmland is now housing. So a lot of the water that was allocated for that is not really being used. But I think soon enough we will see that, which I'm totally fine with. Artificial grass is amazing. I don't think we need to use as much water as we do.
Yeah, I totally agree. Artificial grass is amazing. Plug for top-notch landscaping right there.
There you go. It looks great. Yeah, I can't even tell half the
time. Right? Yeah, they do a great job, and we just got ours measured to get replaced. We love it so much. But anyway, Ryan, we are not here to talk about artificial grass. We're here to talk about the market update. What you got cooking over there in the lending world for us?
Yeah, so I always like to start with kind of an interest rate update, and interest rates have been holding steady. And I know we've discussed it on prior podcasts where, when COVID hit last year, the Federal Reserve jumped in and they've really been doing asset purchases quite substantially, upwards of 120 billion a month. That's correct, billion. And there was a Fed meetings that just came out. The Fed meets every month, and then the next month they release the minutes, where just kind of gives you a detail about what they discussed. And they're finally really discussing the tapering word. And what that basically means is they're holding back on the purchases. They're not going to be purchasing as much, so they feel like the economy is looking good, they're watching Delta and everything like that. But they still see hiring is picking up, employment's picking up, and they're liking how things are heading. So what will happen is when they taper, that's really going to increase interest rates. We're not sure when it's going to happen. Some of the people in the Fed are thinking at the end of the year. People are thinking first quarter of 2020, but it is on their radar now that things are improving. So that's one thing to keep an eye on, that rates probably won't be this low for much longer. So if you're thinking about buying, it might be a good time to get into it.
Yeah, or refinancing too.
Yeah. Sure, absolutely.
And I know that you've done a lot of those this year.
We've been busy with refinances, and with the equity people have been getting in their homes. A lot of people, like we mentioned last time, consolidating their debts, paying off credit cards. So it's a great time to do that before rates go up.
Absolutely. Makes a lot of sense.
It does make a lot of sense. What's your feelings? What do you think? Do you think it's going to happen at the end of this year or the beginning or first quarter or even later?
I do feel like it's going to be the first quarter for what people are saying. The one thing is everybody's kind of nervous to do it. They don't want to shake things up. They don't want to hurt, the economy or home buying. They don't want to hurt people borrowing money. So they try to put it off as long as they can. So if they say end of the year or first quarter, it's usually the latter. I do feel like it would be, first quarter. Yeah.
Interesting. And then like with all the news that's coming out of China's market being a little bit softer than anticipated and such, do you think that's kind of like going to reverberate or do you even think they just said that word tapering just to test the markets to see exactly what's going on?
I think they did. And as soon as they mentioned tapering, you could kind of see the stock market this week did drop a little bit.
Oh yeah.
Because they do get a little nervous about that. Yeah. They're nervous about how that's going to affect the economy. And that's kind of why they've kept the purchases up. Nobody wants to really stop it, because it's worked so well, but it has to be stopped. You can't keep doing it, indefinitely. So it is going to have to happen, and we're going to have to kind of bear with it.
Awesome.
So what are you seeing since last month? Anything different in terms of buyer activity? How are your applications for purchase money? How are those things doing?
So we've been continuing to keep busy, but it does look like applications for home buying has dropped slightly. We're not sure if it's just because of the time of year, but what we're seeing a lot, though, even though they do feel like buying might be slowing a little bit, they've seen an increase in cash buyers. So when you factor in how many cash buyers there are out there year over year, the purchase volume has been pretty consistent from what they're seeing. So is that kind of what you guys are seeing as well with new home buying slowing down a little bit?
A little bit. This past month, we've increased a little bit more in inventory. I have some slides here, of course, to show everybody. Slide Katie is showing the slide. So I pulled this yesterday. Let's see. Can you see that there?
Yes.
Okay, so that's straight from the MLS. You know me, I like to look at single family homes only, what's active in Maricopa and Pinal County. And as of yesterday, when I pulled this, you could see the day and time. Look at that. We were at 5,012, excuse me, active homes, which is up maybe about, 400 or 500 or so than where we were at this time last month.
Yep.
Which is it's nice to see. I'll be honest. We've had so many clients that have taken months and months to get something accepted that the past couple of weeks we're getting accepted contracts now. So there's still multiple offers, but it's not as competitive. So it's been a nice relief.
Yeah. And that's exactly what we're seeing. So Armless Stats actually came out yesterday, and here's what they're reporting as far as sales are concerned. So sales are down month over month. So from last month, of course this is July. So they're comparing July to June. We were down 10%. But, Matt and I were talking about this a little bit yesterday, and we've been around the block a couple of times. We've been in this. Don't just look at me like that. I'm not the only older one here.
I said we've been around the block. Wow.
But we know that the market is cyclical, right? And so every year we kind of see this happen at the same times of year. And we usually see it happen in July.
Yeah. And July's we've always had this rule before, like things got absolutely kooky before COVID and all this. It was kind of like we always said, hey, make sure you get your home sold kind of before July 4th, because usually after July 4th, things slow down. We notice it. We usually end up traveling and doing such, and we notice it. We see it through our data. We see it through our income,
our
leads,
clientele.
everything.
Everybody goes on vacation in July. Everyone.
2020 obviously was an anomaly, and that didn't exist. So this year we're kind of like, this isn't really new, but an indicator. We don't want to be complacent and say, hey, yeah, maybe we're not going to be heading into a strong fall, which usually we do based upon, July and August's activity. But part of me feels like, just with the information Ryan said, this fear of interest rates ultimately going up in first quarter. And then you also have this background activity of cash buyers. So, if we didn't see people that were ready to put their money where their mouth is, was cash and holding back because they were anticipating something, i.e. mostly investors, I'd say I'd be a little bit more cautious, but I think this is probably just typical. And I think it's going to be off to the races come October, especially in Phoenix. Nationwide, that's a whole different subject, but I think we're going to see that.
But and if we go back to the history, so if we go back to the cyclical market, we typically have a little push in September, October.
Yeah.
Anyway, so kind of feeling like it's going to follow along that same line with the, coming off the 2020 weirdness still. So Armless reported inventory stats yesterday too, and I will show you that. And if those of you who don't know who Armless is, it's Arizona Regional MLS. It's our MLS program.
Yeah, it's not some guy with no arms. That's what our kid thinks.
That's what our
I
son
always
thought
Is there
for
a
little while.
legless?
So here's the inventory statistics that they've reported, and of course, they go the entire MLS, which includes some other things than what I use with my single family home count that I do for us each month. So we're up a little bit month over month here.
And this is also, remember, this is from July.
July to
So,
June.
as we've seen, especially when we look at statistics and what we're moving, and that 30 days is a big period, and that's kind of where we're at. And I think we're going to even see a little bit more of that dip going into this month, because when we look at our real-time data, we're seeing it, we're feeling it.
Our
And
August is huge.
It's
Our closings in August is probably the biggest month all year.
And it's been a very, very healthy month all the way around. And I think this is exactly what we need, because not only do you have sellers winning, you have buyers feeling like they're winning, and they're getting what they kind of want versus having to settle, which a lot of them did in the past.
Let's talk about that,
Mm.
because we ran into, not specifically on our team, but a lot of colleagues ran into some situations, some people in our brokerages, where there were some mighty upset buyers after they secured the home, because they waived appraisals, because they waived inspections. There was, the litigation word came out. There were people being sued. There
Buyer's remorse.
Yeah.
And hindsight is always 2020. And I think a lot of these buyers that, put the knife in their mouth, waived all inspections, appraisals, paid 10% over, and then saw things kind of settle. I think they were kind of like, oh man, kind of rightfully so, but that's a byproduct of this market.
It's the game. Yeah.
Just like a lot of sellers that might be, waiting and stuff. And not to kind of go off on this, but I think that this is a real big time for people to think about who's representing them.
Huge.
Absolutely.
When we see super hot buyers markets or super hot sellers market, people stop and they think, well, what's the point of a realtor? I can just do it myself. If I'm a seller, I just put it on the internet and get it sold. If I'm a buyer and there's 60,000 homes in them, why do I need? I can just contact the seller directly. I don't need some. These are the markets where, and I'm not trying to plug us, but I am, because it's the truth, is where a professional will make the difference.
Makes a huge
difference.
difference.
When you have markets changing the way that they are, and you don't have someone at the helm that understands these market trends and how to negotiate and properly play the game of chess in a transaction, you're going to lose, whether you're the seller or the buyer. And I think a lot of sellers right now are trying to jump onto these kind of more gimmicky things that are popping up that are very, very, we'll say, market condition fueled. The 72-hour sale, all these other ones, which, they make sense for a very small percentage of people, and they make sense for the now. But the thing is, the now is now. It's not tomorrow. It's not the next day. And when markets change as quick as they are, you need someone that's real, someone that knows this, and that someone that's it's going to be involved.
Well, and I think the biggest thing is to do your research. So the 72-hour sale gimmick is a funny one, because I showed over 30 houses over the weekend, and I showed 3 houses that were listed by that sort of gimmicky thing. And they were all on the market for almost 30 days. So that's well over 72 hours, sellers out there. And you are getting probably not the best representation, because why is your house on the market for almost a month right now?
Well, and
that's over twice the average, right? Like average.
But you got to remember too, what 72-hour sale does too. Their approach is almost like an open door. So what they're saying is, we're going to give you a cash price right off the bat, and we're going to let you stay in the house for up to 6 months while you sell the home. So at the end of the day, that 72 hours is almost setting their prices. They have all these probably little gimmicks that go along in it. But at the end of the day, it's the same thing as what you're doing with Open Door. You're pretty much agreeing upon a price based upon today, which I don't
need to take the bath on it.
I don't think you need to take that risk. I don't think you need to at all. And if anything, especially as a seller in this market, I think it's wise, because why would they take the risk to do that? And that's the big question. They weren't here doing that when things were volatile. They weren't things. No, it's a market condition, and it will probably end up fizzling, just like a lot of other things, as our market changes, and it will in the next few months to a couple of years.
Not only that, but when you don't have that custom care, when you don't have that representation that understands who you are, what your goals are, where you're moving next, maybe you're moving out of state. Those type of gimmicky companies, or, things that you see on a billboard, they don't care about you. They don't know your specific situation. They don't know how to help set you up so that way that transition can be smooth. I'm working with a lot of people right now. Everybody thinks everybody's moving into Arizona, and that is true to an extent, but there's a lot of people that are moving out of Arizona as well. And we're helping several of those families right now. And without our help to understand what their goals are and to help them with that transition, to connect them with a good person on the other end that can take that baton once they're, halfway across the country. Without that, these people would lose their minds. This is one of the most stressful things. It's right up there with divorce and having a baby, right? So this is one of the most stressful things that you can do. And when you're moving across the country and you have all of these moving parts, and this home has to close at a certain time in order for this one, and there's just so much involved there. For a regular person that doesn't do this on a daily basis, or hasn't done it for the better part of the last 20 years like we have, and we do this for ourselves too, so it's legit. It's a very overwhelming. You almost get to the point of paralysis. I'm just not going to do anything because I don't know what to do. And it ends up blowing up, being a disaster, costing a lot more money than they thought they saved by going with the gimmick. I see it all the time.
So, and then this isn't just a poo-poo on certain things. This is just to bring up the reality of what we do. And same with you, Ryan. You probably see it all the time, where you have, certain industry players that are more gimmicky, and they're not really about creating a lifelong relationship, which we are. That's what we're trying to do. We're not just a flash in the pan. We came up with an idea to solve a problem now. No, we've been here and we will be here for decades. And that's exactly what we need to do. And
case in point, I had one of our past clients call me earlier this week, having trouble with an AC unit. AC unit's leaking. It's a whole big deal. And they're attempting to communicate with their home warranty. Well, they don't necessarily know how to talk the talk, right? Like, we do this all day, every day. We know shop talk. We have these connections with people at home warranty companies. I got involved, and this was a 5-week process that they were going through with the home warranty company. They weren't getting anything done. They weren't getting anywhere. I got involved, connected them with the right people, spoke the right language, and they're getting a new AC unit this week.
Wow. Well done, Katie.
Thank you. But like, Open Door's not going to do that for you.
No, definitely not.
You know what I mean? Like, you have to really put some thought into this and do some research and talk to people who understand what's going on and understand how to hold hands and help people. I also want to speak to, just kind of going back to what Matt said a few paragraphs ago about what's going on with buyers right now. And I do sense a relief in the market. And I think that's nice. And it's nice for sellers too, because honestly, like, we all think, oh, yay, sellers are getting, 50 offers that are over the list price and blah, blah, blah. And that's the truth, but that's very overwhelming for them too. We have a really great system that we use that kind of helps them decipher quickly who the best person is for them. But at one point, when do you just throw everything up in the air and say, okay, pick one,
Well, and exactly. And when you're a seller, you don't do this for a living. And you also you're up to your neck in emotion and trying to make good financial, tangible decisions. And it's so cloudy when you're in that position. So cloudy. And a lot of the time, people will end up being blinded by just the offer number. And that's it. And that's where we've had these discussions with our sellers and had to, and say,
terms
you have
make
to
a
be
big
very,
difference.
very careful. And that's where our experience comes in, and understanding what the motivation is behind the specific buyer and or buyers, and where do the vulnerabilities lie? Because as we've seen, especially when markets are changing right now for sellers, they go in, they pick this highest offer, and guess what happens 9 days into their 10-day inspection period? Canceled, back on the market, because someone's been shopping and they realize there's more inventory, and you went with someone that just gave the hottest offer but didn't love your property. If you just have someone that's representing the quick gimmick, get you the best, they're not thinking about that or looking at that because all they're thinking about is just getting this house sold.
They're not going to tell you. They're not going to help bring you through that and
No.
help you to understand what red flags they've seen in the last 20 years, basically.
Yeah.
You know, I mean, we know no real estate transaction is ever the same, but once you have several years under your belt, you know, Ryan, there's lots of similarities. You're like, I've seen
there's
this
friends.
Yeah, exactly. So it's a bit relieving for the sellers, which is nice. It's helping with emotions out there. It's also a bit relieving for our buyers. Again, I showed 30,000 billion houses over the weekend, and I was quite shocked because, I mean, granted, we had a nice sizable down payment, but I got a contingent offer accepted. And I know I was up against other offers that were very, very competitive. So back in the day, I mean, a month ago, 6 weeks ago, I would have told you if you were contingent, we probably don't have a prayer.
Yeah.
But that's starting to happen now. So that's nice.
Yeah. So are you seeing this though on your end, Ryan? Like as far as like just the words that prospective people that are looking to refi or even come up, do you notice different words that are be using that they're a little skeptical or they're not as sure or sensing kind of volatility on that front?
With well, you know, they have been getting more contract, except like you mentioned, Katie, I have been seeing more and more contingent offers getting accepted. And but with offers, we have been seeing, like you kind of mentioned, Matt, more cash offers being out there. And there was a statistic, 23% last month of home purchases were cash offers. So we're seeing that, and it's kind of interesting. Investors are obviously seeing something still. You know, they're seeing that the market is still good, that it's still time to put money into real estate, especially with interest rates so low. But so we are seeing more clients getting a little bit nervous about making offers because they are kind of getting beat out by investors here and there. But I'm hoping that slows with more inventory getting out there. And I'm glad that you guys brought up those statistics.
Yeah, so we definitely have more inventory. I have one last slide that I wanted to share, and this was put out by Realtor.com, and it's a few months old. It was put out in April of 2021, but I thought it was really interesting because Phoenix, Mesa, Scottsdale, Arizona, so like our biggest cities, I guess, is on the map. We are the top as far as investor net contribution to inventory. So basically, investors are coming in, they're buying up a lot of our properties. So this really backs up what you're saying, Ryan.
Absolutely. And I was reading one other statistic that's kind of interesting. CoreLogic, they released their single family rent index, and it's showing that rents are up 7.5% year over year, which is the fastest increase since 2005.
Yeah.
So yeah, with home price increases, you're going to get rent increases. So we always tell people, you know, even if you're renting, you know, you're paying a mortgage no matter what. You're just paying someone else's mortgage. So might as well pay your own mortgage.
Exactly. You're paying their mortgage, their expenses. You're paying for their family vacations. You know, maybe you should pay for your own. I like that advice.
Yeah, completely agree. And speaking of which, there are some new programs and some relaxing of guidelines coming out, which we knew was going to be happening. You know, with affordability kind of being a concern. You know, the administration is really trying to make things more affordable, make first-time home buyers more able to qualify. So we're seeing some changes, actually. One thing, when COVID first hit, FICO scores were basically, they were kind of increasing it. They wanted to see 620s and 640s to get approvals. But now it's kind of been relaxing a little bit. We're actually seeing 580 scores being allowed again. So we're getting a lot of approvals down to 580 credit scores, which is great to see. That's on an FHA loan. You have to bring your 3.5% down. But even if you have less than perfect credit, there are options for you out there. And I know we mentioned on a past podcast that, you know, they're relaxing their student loan guidelines too. If we have first-time home buyers that just got out of college and getting jobs but have a lot of student loans, which we see a lot, you know, they're accepting income-based payment plans. They're not requiring you to hit them with just 1%, which really kind of puts a handcuff on how much you qualify for. They even dropped it to 0.5% instead if you're on deferment. So we're seeing a lot of interesting things. And there was another update that might be coming out in a month, which is kind of exciting. This is for conventional loans that you could actually use the median income now, or not median income, median credit score for two buyers instead of just using the lower of the two. So basically what that's good for, Sometimes we have two buyers that we need both of their incomes on the file. One has maybe a 700 score, but one maybe had some credit issues and has like a 620. So we couldn't really take them conventional. We'd have to go FHA. Now, in these kind of circumstances, we could use kind of the median credit score and get them qualified together for a conventional loan. So that's kind of a cool update that's coming out. So they announced it last week, but we're still waiting for feedback on mortgage insurance companies and banks, how they want to handle that. But that's kind of one new thing that's being rolled out. And along with that, they're actually having rent payments being added on to credit. So that's going to really help bump up people's scores, 40 to 60 points, because, that's a big chunk. Usually your rent's maybe 1,000, 1,500. And if we could show months, 12, 24 months of paying on time, that's going to give you a good score boost. So there's a lot of exciting things coming out that's really going to help people who haven't been able to qualify before to get into the market.
And that was all done through Fannie Mae, right?
That is, yeah.
Yeah. So I was reading about that, and that's real interesting. And I'm naturally skeptical, because obviously we're kind of all a byproduct from 2008, so we still have a little bit of that in our back. But it makes me feel like there's a confidence level on this more conventional approach, that even conventional institutions are saying, okay, we can be a little bit more lax. So that I think coincides with what we were talking about, cash buyers buying right now. I think, there is some confidence there. And that's good to see. So,
well, and obviously we're seeing very, very low percentages in distressed sales. So I'm sure that plays into it too. I was just looking at, yesterday, I was looking at Phoenix's distressed sales, and we are still at like nothing. I saw one short sale. I haven't seen a short sale in like 2 years. I saw one short sale over in Marley Park in Surprise. And now, before you all run out there and go to Marley Park, it was a $200,000 list price, you guys, for a 2,500 square foot house in Surprise. So we all know it's not going to sell for 200,000, but I thought it was really interesting to see a short sale.
We all know it's not going to short sale. It's going to end up getting foreclosed on, and the bank's going to keep it.
Yeah, right.
It's that's crazy. But hey, I don't think we're going to see that for a bit. So
no. Bottom line, market's still healthy, guys.
It's very healthy. It's very healthy. And I think everyone should, if anything, this is a great time to look. As they say, most investors, when they say, hey, if there's blood in the street, it's time to buy. And, right now we're kind of feeling that if you watch the news, everything, granted, the news just loves to send the most negative stuff. But when you have stuff that's happening in Afghanistan, when you have stuff with COVID, when you have stuff with the border, when you have all this stuff that's just bad, it's distracting, and that does create opportunity. So I think if you're one of those buyers that's sitting on the side, don't fill your brain space with all this news stuff. Focus on what your family needs in that buying, and I put that energy there, and I guarantee you will like those results more than the first.
And call the experts, right?
Yeah.
Exactly. Yep. Well, thank you again so much, Ryan. It's always a pleasure to have you. Everybody out there, if you are interested in being a guest on the show, please follow us at Team Evo AZ. That is our handle. And you can find us on Facebook and Instagram, YouTube. Rumor has it we might be on TikTok real soon. Right, Matt?
All right.
So while you're there, give us a like, give us a follow, send us a quick message, and we will discuss you being a guest on our show. We are looking for more guests to interview. Also, while you're there, if you would please subscribe, download, and rate us on your favorite podcast platform, we would greatly appreciate that, so we can get the real info out to the real people. All right, guys, until next time.
Ciao.
Bye, everyone.